Next, we have our other sponsor, the Nairobi Securities Exchange, and they will be represented by Mr. Terry Edembesa, and he is going to come and take us through their presentation. And when he is done, we are going to invite Mr. Paul Kinuthia then to come and make his presentation. So thank you very much.
Thank you, Robert. It's going to be hard to present after Patricia. But Safaricom is trading at 9 bob, which is exciting for ourselves. We no longer have to explain to Mama Mboga why Safaricom is trading at 3 shillings. Ladies and gentlemen, I just want to give you a quick brief on the exchange, some performance of the market, how it's been doing, and have a little discussion about some of the opportunities that lie for yourselves. You all know the exchange. The exchange started a while back in the 50s, and our strategic focus is to evolve into a full service exchange. So we want to do the trading, the clearing, the settlement of equities, which majority of you understand as shares, debt, your bonds. You've seen in the papers, we have a small fight with the CMA about us doing a derivatives market, and also other associated instruments. We are at the core of the Vision 2030, the economic pillar on capital markets. And of course, one of our key targets is to position Kenya as a leading financial hub in East Africa. You might not know this, but NSE was the 5th best performing market globally, so you're in the right place. Why East Africa? We think it's the ideal frontier market. Of course, the opportunities that lie for yourselves and for your businesses. It's the hub, financial, communication, transportation hub. You want to be in that space if you are in business. We are currently a buyer's market presenting massive bargain opportunities. There are quite a number of ongoing market reforms. You know that market is currently automated. You won't get that elsewhere in East Africa. We have enhanced disclosure requirements. We have beefed up on the brokerage, back office brokerage system, and we are in the process of taking the exchange public, and you should be hearing this in a short while. But key out of all this is the pension sector participation that we think is key for yourselves, especially as concerns the provision of capital towards your business. The index, which really is the indicator of how the market is doing, is up about 30% from about 3,200 when the year started to about 4,700 as at close of September. FTSE International, you know, the guys who do FTSE 100, they also calculate the indices for our market. FTSE has predicted a long-term performance, a long-term 5-year performance of the exchange. They think the exchange index will grow by about 86%. Good numbers, eh? In the next 5 years. We think, of course, with the index being at around 4,700, the best confidence levels for you to consider going public is at around 4,600. You get good valuations around that level. In terms of equity turnovers, the exchange turnovers are up about 30%, as I said. Market capitalization is at about 1.8 trillion. Of course, this is mainly driven by some key counters, Safaricom, EABL, Kenol Kobil, and the financials, Equity, Barclays, Cooperative Bank, that kind of thing. Foreign participation in our market is at about 50%. Of course, mainly from Europe, from the States. We are trying to encourage the asset managers from Asia to come into our market. But this is quite a positive trend for us. We think we've seen some months that this has gone to as high as 75%. So the confidence level, of course, from the asset managers is pretty high. However, we think the economy will be pretty subdued for the remainder of the year because of course, the various concerns that you might be aware of. Inflationary pressure because of the introduction of VAT, the VAT increase. We think, of course, the economy will also be subdued because of there seems to be a delay, a lag in government spending. Majority of you might have experienced this. And we also think, of course, the security fears might deflate the economy in the last quarter of the year. Of course, there is a concern of what is happening in the States, which is important for us to have a look at, to be cognizant of. Lehman Brothers, when Lehman Brothers went down, there's a huge global financial crisis. The US government is about 23 times bigger than Lehman Brothers, so the possibility of a default, and of course the brinkmanship being shown around the Democrats and the Republicans, we think there could be an effect on the global economy. So what I'd said, why are we there as an exchange? What are we striving to do is really to enable people like yourselves discover the opportunities that are out there. I'd mentioned the discussion about pension assets. Kenya is currently sitting on in excess of about 500 billion Kenya shillings in assets, and this was as at end of December 2013. Of course, the assets have grown year to date, so you could easily be looking at a figure above 600 billion. The RBA, which is the Retirement Benefits Authority, regulates regulates where the asset managers can invest that money. So the asset managers have limits of where they can invest that money. In quoted investments, the asset managers can place up to 70% of a particular fund. In non-quoted, their limit is 5%. Of course, there's a discussion about increasing that limit from 5%. Currently, from the research from the RBA, the existing asset managers have placed close to 24% of the money that they have towards equities. This will represent about 130 billion. And of course, majority of this has been placed with the existing firms that are listed on the exchange. But with the introduction of the GEMS market, this poses a new opportunity, a new place you need to be able to tap into. As I said, the limits are much higher for quoted counters, and this now gives the opportunity for asset managers to be able to look at your company and to be able to invest some money in you. Just a quick look at how much has been raised through the capital markets in the last 4 or 5 years, from an excess of about 190 billion Kenya shillings, raised either through equity or bonds, for the listed firms and for the Kenyan government. So what do we think are the key hindrances for your companies? Of course, is the ability to raise substantial and ongoing capital, and of course to access access to strategy and advice to enable the organization to grow exponentially. Of course, there's perception that in this market that you go public when you've become a big firm. And also, there's another perception that there's too much disclosure when you go public. With the introduction of a new taxman, who's a taxman in his character, with the introduction of these rating agencies, with the introduction of new cabinet secretaries who are from the corporate sector, you should expect that there'll be more disclosures all around your business. So there's nothing new that the exchange will be introducing. This is stuff that you are expected to be disclosing. So I just want you to think through about that perception about disclosures. The other thing, of course, is that with the introduction of the GEMS market, is that you are then able to use a listing to grow your firm. And it's not the other way around. You actually use your listing to grow your firm. So we have put one or two good people who are able to give you some insights about this discussion, and we would be happy if you join us in the afternoon in the breakout session. You all know Bharat. That's what Bharat says about his business. The most important decision for him was to take his company public. Thank you very much.